Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about the 3 best practices for beginner traders. You might be new to the markets, you might be interested to get started, and you've looked at the markets, you looked at everything available, and you want to take advantage of everything that happens in the markets. But here's 3 things to think about. The first of which is, every time you get into a trade, you should be trading with the longer term trend. Here's the thing. The stock market has been a long-term uptrend over the last 30, 40, 50 years. You can look through any chart and see that the US stock market has been trending higher over time. But just because it's in a long-term trend does not mean that it's going up every single day. There are times where we face bear markets, recession, big drops and dips. You want to trade in the direction of the longer term trend and to look at the broad market indices and see what it's doing, like the S&P 500 or the Dow Jones. Here's a tip. Check if the index is above the 100-week moving average. If the index is above the 100-week moving average, you can conclude that it's in a longer-term upward trend, and you can probably look for buying opportunities in the market. If the index is below the 100-week moving average, you could conclude that it's in a bear market or even a recession, and you might want to stay out, wait for a good time to get in. The second thing to consider, very importantly, is to plan for your exit. When you buy stocks, you enter a trade only when there's a valid trading setup according to your trading plan. So similarly, you also want to plan your exit ahead of time. Regardless of whether you're exiting based on a trailing stop loss or based on a certain key level or fundamental news, you want to plan all these ahead of time. Because if you don't plan your exit, you're going to be happy if a stock goes up, but panic when the stock collapses and you sell at the bottom right before a rally back up higher again. The key thing here is to plan your exit ahead of time. If you're going to go with a trailing stop loss, then define what trailing stop loss you're going to use. If you're going to capture a swing, then identify ahead of time which levels you exit the trade at. And lastly, understand, look at the behavior of the markets that you're trading. Different markets have different price action and different behaviors. For example, the stock market is proven, according to research, that it's been a long-term upward trend. Yes, there might be pullbacks along the way, but more often than not, it will become a bear market or recession. That pullback usually ends, and then the uptrend will continue itself. If you're a stock trader trading stocks in an uptrend, whenever there's a pullback or correction, those are probably trading opportunities for you to buy, because there's more than 50% chance that the trend will resume itself. If you understand this behavior of stocks, or even in other markets, you can use this to your advantage even as a price action taker. Another example is in the FX markets, with the pound dollar, and also in gold. You do see quite a strong trend and correlation there. These are the trend or the trending forex pairs, and you want to have a momentum behind them. Whenever these pairs break above the previous day high, they tend to continue trading higher. Whenever it breaks below the previous day low, it tends to continue sliding and trading towards the downside. Anyway guys, that's it from me for today's podcast on the 3 best practices for beginner traders. Do remember to subscribe to our podcast, as here at IronFX, we're dedicated to bringing you the very best trading education to take your trading to the next level. Till then, stay safe and trade safe.